welcome to Financial Confidence, where we're helping you to make your money, keep your money, and grow your money so you can do the things that you're called to do. You're listening to WYTV7 Community Broadcasters Network, and we appreciate you for stopping by. And just for stopping by, we want to give you an opportunity to enjoy a 4-night luxury cruise getaway. Yeah, I said it, a 4-night luxury cruise getaway. Stay tuned to the show so you can hear more about this.
Finances in a rut? Need a way out? Lynn Demmons is here to help. She's your personal financial rebound coach. Being a wife, mother, and educator, she understands the importance of controlling your finances and building generational wealth. She is here to help you find money you didn't know you had and live life on your terms. Sounds too good to be true? Well, it is true, and it's definitely a good thing. Lynn Demmons of Demmons Enterprise offers one-on-one coaching, group coaching, and radio podcast entitled Financial Confidence God's Way on WYTV7 Christian Broadcasters Network. Lynn
Demmons, Financial Confidence, we want to hear your money success stories. How you doing? What you're learning? What are you implementing? How are you growing? Those are the 3 things that we definitely want to hear from you. Here at Financial Confidence, we're helping you to make your money, keep your money, and grow your money so you can do the things that you're called to do. That's to build generational wealth and leave an inheritance for your children's children. I'm Lynn Demmons. That's Demmons, no demons here. And I'm America's #1 financial rebound coach. Yes, I said it, America's #1. Today, we're going to be sharing some information with you because it is April. Yes, April is Financial Literacy Month. So we're giving back to the community by providing the education and support that you need to make, keep, and grow your money. So stay tuned. Go get your pen and your paper and get ready. Before we get started, guys, the guiding principle of our show is Matthew 6:33. Seek ye first the kingdom of God and his righteousness, and all these things shall be added unto you. We also implore that you pray over your finances so you can do the things you're called to do. So if you will, bow with me. Lord, help us to value the things in this world that are really valuable. That's our relationship with you, our lives, and our families. Help make us responsible stewards of your financial resources, and let us trust your holy word. The eternal glory in thy son Jesus' name, we pray. Amen. All right, guys. Yes, we said we'll be giving away a 4-night luxury cruise getaway where you can sail to Cozumel, to Nassau, Bahamas, or a variety of different locations. We'll be hooking you up. So stay tuned to Financial Confidence to see how you can win. So for today, guys, we are going to be helping you with your credit. Right. Sometimes your credit just won't get it. So how do we get to the point where our credit will get it for us? All right. So I'll be sharing some information today from the National Financial Educators Council, which I am a member of. And we're basically going to be looking at some credit profile basics so you can go in and make sure that you are doing those things that you need to do. Because in the last show, we talked about accumulating assets. However, sometimes you need the right credit in order to partner with the right people, right, to get to that next. So the term credit is used in several different ways. And as we look through these basics, we're going to be talking about several things: credit history, your credit score, your credit report, the credit bureaus, and your credit profile. So we see a variety of different ways that this term is used, and I want you to be aware of each of those. History just simply is related to the number of years, right, that you have either paid or not paid, or a loan was made to you. Everything that you've done from a financial standpoint that is captured in your report. Your credit score is also going to vary. Looking at getting you to that 700, 800 range is the goal here with Financial Confidence, so that when you view your credit report, that actual report that shows everything about you, make sure you're checking that out every year as well, if not more frequently, to ensure that everything is accurate. You're following up with those credit bureaus. There are more than 3, but we do know the top 3. Experian, Equifax, those credit bureaus, sorry about that, guys, and your credit profile. So all these different things, all credit's used in so many different ways. So how does buying on credit work? So you see this little schematic on the screen if you're watching this video. If you're listening, it starts off with you make a purchase on, let's say, your credit card, right? That credit card holder is basically a lender. And from that, so they are lending you the monies, right, to make the payment to that merchant that you've just purchased from. So let's say you were at the mall or Walmart and you're buying something, you're taking that credit card, they lent you the money to pay the creditor, so that merchant has been paid off. Now you pay the lender those payments plus interest, and that all goes back to the lender. So you're kind of like a middle person, if you will, because you are paying for those goods and services, and you're paying interest to borrow that money from the lender, okay? So Experian, TransUnion, and Equifax, that was the one I left out, TransUnion. Those are the three most common bureaus where you can actually go check out your credit profiles. You do get to go in and get one annual credit report for free. So make sure that you check those out. Experian, TransUnion, and Equifax, because different companies or organizations will tend to use different credit bureaus, but these are the top three. So again, just reintroducing those credit terms defined. Your credit history is information about how you've managed debt over the years. What have you purchased? What have you paid for? Things of that nature. The bureaus, those are the companies that's collecting your information about your debt, and your credit score is the number. Like I said earlier, we're trying to reach those 700s, 800s as a representation of your credit worthiness. And then the credit report is just a summary, right? It has your credit history and your scores. Sometimes if you pull the credit report, you may have to pay extra for your score, but nonetheless, those are combined there. So let's look at how understanding your credit profile is going to be helpful in making, keeping, and growing your money so you can do those things that you are called to do. So the credit bureaus produce these reports, TransUnion, Equifax, and Experian produce these reports that pull over what we call our FICO scores or your Vantage scores, all right? So what are they looking at in regards to this? They're looking at the date that you opened up the credit card or that account. What kind of account is it? Is it an installment account or is it a revolving account, right? The revolving accounts are going to stay available to you forever, right? And the installment is going to be paid off when the last installment is due. Is it joint credit or individual credit? What is your balance? Did they give you a $3,000 credit limit, and how are you utilizing that credit limit? What is the balance, percent utilization on that? When was the last payment made? Did you make it on time? Did you make it early? Did you make it late? And if it is late, how late were you? So what was that past due information? What's your limit? Are you limited to $5,000, $10,000, or do you have a $50,000 limit? And what are the additional terms and agreements that you may have with that particular lender in regards to utilizing that particular account? So is it current? Is your account current? Is it still open? Is it closed? Who closed it? Did you close it? Did the organization or the company close it? Was it charged off? Did it go to collections? All of these things are important parts of your credit reports for each of your accounts. So make sure you go through that, look at it every year to ensure that everything is accurate. As far as your credit score calculations, your FICO score is also known as your Fair Isaac Corporation. That's independent from the bureaus, okay? And then your Vantage score, that's a combination of other bureaus that are working together to actually pull those calculations of your score. That's how you know if you have a 680 or a 790 or 850, right? That calculation is determined. So it depends on if you're looking at your FICO score or your Vantage score. And you may see those now. Most of the time they're either on your bank or your credit union accounts where you can see your scores, and they'll say your FICO score has been updated, or you'll see your Vantage score on your reports. So your FICO grading system basically looks at the different things. 35% is your payment history. How are you paying? Are you paying on time? Are you paying early? Are you paying late? 30% of it is the amount that's owed. Are you utilizing a lot of your credit? Are you using a little bit of the credit that's available to you? 15% is the length of your credit history. Did you just open it 3 months ago, or have you had it for 30 years? And 10% is new accounts. How many new accounts have you opened up in the last year, the last 24 months? Is going to impact your FICO score differently. And then 10% is the type of credit. Is it an installment or is it a revolving credit? Which one is going to be better for you? Of course, revolving is going to be better for you. And just looking at the utilization. So keeping the utilization low is definitely going to improve your FICO score. Now for the Vantage score, it's a little bit different as far as the percentages. So 40% of that is payment history. So you see that's a large chunk. How well do you pay, and do you pay on time? 21% is the length of credit history and the types of credit. So the longer you have it, 10 to 15 years to 20 years, the better it is for you in this grading system. 20% credit utilization. So how much of the credit that's available to you are you using? And try to keep that as low as possible to improve your credit score. So in the event you do need to access this credit for an investment opportunity, you have that available to you to help you get started. 11% of your score is graded based upon the amount that is owed. So how much do you owe of the credit that's available to you in comparison to your income that's coming in? 5% of that is new credit accounts. Are you opening new cards or new lines of credit on a regular basis, or you have not opened one in a while? And then 3% is the available credit card, okay? The available credit in general. So how much credit is available to you is 3% of your Vantage score. So these scores are used in a couple of different opportunities. Just make sure you know before you have that conversation. So ask those questions up front of your banks, of those credit card holders, of the organizations that are lending to you. Which of those do they utilize and why? So when we look at the credit score ranges, typically credit score goes from 300 on the very low end to 850 on the high end, okay? And this is the typical, because it's not everything. It's more than just these types of score. Want to put that out there. There are many different types of credit score ranges, but these are the most common. So exceptional credit is 800 to 850 for FICO, but on your Vantage score, a 750 to 850 is excellent. So you have to look at each of those different scores and see where you fare in the grand scheme of things. So you'll know if I have good credit or very good credit or excellent or exceptional, and which one of the different systems are being utilized to look at that for your credit profile. So how do you get and keep great credit? Yes, this is a very important concept, and many of us think we know this, but I think it's just about being reminded, right? And like I said, it's Financial Literacy Month. It is April. We're getting back to the basics, because sometimes it's great to be reminded of those basics, because you'll get a crack in your foundation here or there. So how do we repair the cracks in the foundation? We go back to the basics and we fill it in. So some of those tips is to pay your bills on time. Can't speak enough about that. If you are, one of those people who say, you know what, I need to set up automated payments, then do that. It simplifies your life and it ensures that you don't miss those bills. However, you may be that person on the other side of the table who says, you know what, I need to see my money first before it's automatically taken out of my bank account and paid out to someone else. So I will manage that. And that's okay. Do you. But what's most important is that you do have a system that works for you, for your lifestyle, to ensure that you pay all your bills. Yes, all your bills on time. Remember, the word teaches us to render to Caesar what is his, right? What is due. So keep your debt low. Oftentimes there are things there. We are the right now generation, right? We feel that everything is easily and readily available to us. It's at our fingertips. If we want to look up information, if we want to get something, we can just go online, order it, and they'll deliver it to our house in the next day. So we are the right now generation, but keeping debt low, I think one of the number one things that we need to prioritize is what are our priorities, right? What are your priorities when it comes to your finances? And are you prioritizing that thing? Do you really need it? Right? Ask yourself that question and give yourself a 24-hour window to think about it before you actually press the button to purchase or go into that store and actually buy the item itself. The third tip is just to maintain a good credit score. You want to keep your credit score as high as possible. So when you do need a loan or you are partnering with a company to process an investment opportunity, or you're looking to do something different, then you have that as an option. It shows that you have a great credit score and they're going to be more willing to move forward with you and lend you the funds that you need. Keep any of those inquiries to a minimum on your credit report, if at all possible. It doesn't mean sometimes you can do, there are soft pulls and there are hard pulls, and you can follow up with different institutions if that's something that you are looking into, but just be mindful of that. And it doesn't impact your credit score as much unless it's like excessive pulling of your credit. Also, have health and auto insurance at all times. Why? It's better to have it and not need it than to need it and not have it. And that goes with a lot of things in our lives. Your health is definitely your wealth, but you cannot always be responsible for everyone else out there on the roads. I know here in Metro Atlanta, I am thankful for auto insurance because you cannot control the other driver. We have to learn to drive for the other drivers. The same thing with our credit. We have to be responsible with our credit just in case things happen within our environments. And definitely check your credit once a year, if not more. Make sure you stay on top of that so that you're understanding your credit profile and making the adjustments as they are needed. So in accessing your credit reports, once you do go over and you pull down your credit reports, you're going to identify the areas you need to address first. If there's anything that's inaccurate, if there's nothing that's inaccurate, then you're going to set up or review your account automation. Review that every year, if not more frequently, because sometimes those automated opportunities is what I call them. There can be a glitch in the system there as well. So make sure you're setting it up and you're reviewing it every year, if not on a monthly basis. Definitely reviewing your bank statements on a monthly basis if you're not doing that, but following up on that from that perspective. Review your insurance coverages, make sure there are no changes, because they'll change something, send it to you in the mail. 9 times out of 10, you don't read those little mailers that come, right? And we push it to the side and we don't look at it until something happens. So make sure you're reviewing any insurance coverages that you have, and then consider credit protection. How many times have we heard, right, of something happening at a doctor's office or at some business that we frequent to purchase food, clothing, you name it, right? These things happen. So consider credit protection as a way of protecting you as well, so that you receive the alerts and you don't have to worry. So how do you obtain your credit reports? You go to annualcreditreport.com, right? You can hear that song. I know I can hear the little jingle in my head as I'm listening. You click on request your free credit reports, enter in your personal information, and click next. You choose the bureau from which you want to receive your report. Is it Equifax, Experian, or TransUnion? You verify your information. You access your report. You can print that and look at it, highlight it if you want to, or you can save it as a PDF on your laptop and then highlight on your laptop. Either way you choose to do it, old school or new school, you have the option of doing that, and it's free. So don't miss out on that, guys. Check it out. Check up on your credit report. So what is the sample credit plan for you as you're moving forward? When I give you these steps, like I said, what we want to do is give you things that you can act on now. So number one, credit report. Pull your credit report from all three bureaus at once. Get one from each bureau every 4 months, okay? That's first. Your credit score. You can get a free score from a company, and then you can purchase your accurate credit score as well. So make sure you have, I know through my credit unions and banks, they have the credit scores readily available there for free for me, so I can get that, right? You do the same thing for you. What is it that you have readily available to you at your fingertips? Just utilize that information. Make sure the third thing, you're reviewing the data for accuracy. And fourth, start a credit report file for yourself so that you can go back and compare the information, see how well you're doing or not doing. That way you can make adjustments, because what we check is what gets done. What you look at is, and what you focus on is going to improve. So this is going to help you to do that. And when you do that, you're looking for trends, and you're going to identify what those long-term solutions are. What are those things that you can put in place over the long haul that are going to help you to get to the 700s, the 800s that you want to be in as far as your credit score? And then monitor regularly and set reminders. We have little smartphones, guys. Put that calendar reminder on your phone, whether you want to look at something monthly or yearly or weekly. It doesn't matter. You can set it on your calendars on your smartphones, or calendars on your laptops, or the calendars in your email. It doesn't matter. Set reminders for yourself so that you can move to your next, all right? Like I said, guys, I'm Lynn Demmons, America's #1 financial rebound coach. Yeah, I said it, America's #1. And we thank you for tuning in to Financial Confidence, where we're helping you to make your money, keep your money, and grow your money so you can do the things that you're called to do. That's to build generational wealth and leave an inheritance for your children's children. As I mentioned at the beginning of the show, oh yeah, don't let me forget. Yes, the 4-night luxury cruise getaway. You can enter to win this 4-night luxury cruise getaway. Share with us 3 things that you've learned from this episode of Financial Confidence. Your name goes into our drawing for the 4-night luxury cruise getaway. We'll be doing this into May. The final drawing will be pulled at the end of May so that we can get that information out to you. Again, that is for a 4-night luxury cruise getaway. You can sail to Cozumel. You can sail to Nassau, Bahamas. And we have a variety of different places that you can sail to, and you'll have up to 20 months to get that travel taken care of. I know you're tired of being in the house. Yes, we're tired of the pandemic. We're ready to travel. We're ready to mingle. We're ready to get together with friends and family. And we're here to help you make your money, keep your money, and grow your money, so you can do those things that you're ready to do, right? Those things that you are called to do as well. That's to build generational wealth and leave an inheritance for your children's children. Thank you so much for tuning in to WYTV7. If this information has been invaluable for you, head on over to WYTV7.org, leave a donation so we can continue to deliver education, empowerment, and inspiration to you. Thank you for listening in to Financial Confidence on WYTV7, Community Broadcasters Network. All right, guys, until we meet again, I'll see you the next time, the same place. Until then, you stay safe.